Shall we start, sir?
Yeah, please, madam. Madam, we'll start. Lakshmi.
I welcome all of you to this webinar on latest amendments in GST, including changes recommended by the part of the GST Council meeting. I welcome all of you to this seminar. I welcome our today's speaker, Dilip Phadke from Mumbai, and our President, Sri Bhaskar Reddy Garu, our Chairman, GST and Customs Committee, Sri V.S. Sudhir, our Co-Chairman, Irshad Ahmed, and participants, distinguished participants, and other stakeholders. I welcome all of you to this webinar. I appeal to all the non-members, please take membership from FAPSI and advantage of right benefit of FAPSI's knowledge sharing sessions as well as lobbying center and all these things. I appeal to all of you non-members to take membership. Thank you. I welcome Sri Bhaskar Reddy Garu to give his welcome address.
Thank you, Lakshmi. It gives me great pleasure to extend my warm welcome to CA Sudhir VS, Chair GST and Customs Committee of Federation of Telangana Chamber of Commerce and Industry, Chartered Accountant Mohammad Irshad Ahmed, Co-Chair GST and Custom Committee FTCCI, Sri Tirumalai ji. He couldn't join today, but he's always there for our all programs. He's advisor for GST and Customs Committee. And today's speaker, Chartered Accountant Sri Dilip Phadke ji, partner SKYGDP and Associates, Chartered Accountants Mumbai, distinguished participants, ladies and gentlemen. A warm welcome to this webinar on latest amendments in GST, including changes recommended by this 45th GST Council meeting. Thank you very much for joining us today. Ladies and gentlemen, pursuant to this 45th GST Council meeting of Central Board of Indirect Taxes and Customs, I think CBIC has issued GST notification to implement the decisions taken by this council. Notification amendment amended like GST rate on services and goods, and they exempted certain services and goods from GST, deal with RCM applicability on supply of I think some menthol oil by unregistered person to registered person, and imposition of compensation cess on carbonated beverages of fruit drinks or carbonated beverages with fruit juice with effect from October 1st, 2021. I think there are some prominent changes they have suggested, which will have a lasting effect on entire trade. And one more key change is e-commerce operators like Swiggy and Zomato will come under GST regime now. I think they are now required to pay GST on restaurants service supplied through them, since tax is charged at point of delivery. So earlier restaurants used to pay the tax. Now I think these some intricate changes will have a very some kind of an impact. These decisions will impact the Indian economy itself. It becomes important for stakeholders to familiarize themselves with these developments and its implications on trade and industry. And who better than seasoned speaker like Chartered Accountant Dilip Phadke ji to address these issues. He has got very in-depth knowledge on these issues. Thank you very much for accepting our invitation, Phadke ji. And I hand over to Sudhir for taking forward this webinar. Thank you very much for joining all the participants. Thank you.
Thank you, President Bhaskar Reddy Garu, for your welcome address. Madam, I'll go ahead. all of you would be aware that earlier the law changes was restricted to the budget. So every time in February, we would look forward for the budget, and the changes was coming overnight of 20th of February or 1st March. And we were looking at all the rate changes, implication and things like that. But now under the GST era, the lawmaking authority is the GST Council, and budget has no much relevance. So considering this, FTCCI, we have taken this initiative to bring all the changes to the members quickly, along with not only giving a small mailer of the changes, circulating the press release, also looking at what is the actual practical impact on various industries which is having. So thereby we would be organizing such webinar on a monthly basis to give the entire updates as to what has happened in that particular month. So this time we have Chartered Accountant Dilip Phadke. I was fortunate to share a dais with him in one of the seminars at Nanded. He's a very well-learned speaker, and he will be able to do justice. And he has made a customized presentation today only to address the industry people, not for the practitioners. So more of practical aspect on this changes is what is going to give us. So I request all the members to circulate this initiative which is happening with FTCCI, and encourage more people to join and take the best benefit of these programs. So thank you all for joining in. Over to Lakshmi Madam. Madam, you are speaking on mute. I think I would request CA Irshad Mohammed.
Yeah, fine. Fair enough. So fine. It's, I guessed it because it's time to it's time to introduce Mr. Dilip Phadke ji. So it gives me immense pleasure to introduce Dilip Phadke ji, who has passed CA and LLB in the year 1976. He is a veteran in the field of taxation, especially indirect taxes, with 45 years in the field of GST, sales tax, Maharashtra value-added tax, income tax, and other areas. So he has authored many books. Amongst them, one of the most important publication is co-author of Commentary of the Maharashtra Value-Added Tax 2002, published by Maharashtra Sales Tax VAT News. He is also editor of MVAT and GST News weekly publications. So he writes monthly article tidbits on LBT and VAT in Sales Tax Review, published by Sales Tax Practitioners Association. And he is a co-author of Handbook and Practice Manual of GST. He has a strong presence in academics. Up to July 2012, he was the head of Accounts Department of Lala Lajpat Rai College, one of the most reputed college, and he is a member of he was a member of local managing committee of Lala Lajpat Rai College. He is the ex-chairman of Board of Studies in Accountancy, Mumbai University, and he is ex-member of following committees of Mumbai University: the Academic Council, the Faculty of Commerce, the Board of University, so on and so forth. The list goes on. So he has got immense experience, academic experience in various fields across various institutions. So he is a speaker and resource person recognized by the ICI, Institute of Chartered Accountants of India, and approved speaker on GST. So he is a speaker and resource person at various study circle meetings, conferences, and workshops of Institute of Chartered Accountants of India on VAT, GST, and also the housing societies. So he is a speaker at Regional Training Institute at Audit Bhavan, Bandra. So he has delivered numerous lectures on VAT and GST and issues in VAT to the sales tax practitioners. He is a lecturer on GST, AT or TO, food and hospitality sector, MSME, textile, construction, and the list goes on across various industry sectors. He has given lecture on GST Bhavan, Mumbai on GST and GTA to Joint Deputy Assistant Commissioners along with dealers of GTA and transporters. He has given lecture on ITC. He has given lecture on GST impact on doctors, healthcare industry, GST at Indian Medical Association. He has delivered more than 150 lectures in and seminars organized by the Institute of Chartered Accountants of India. So we were also fortunate to have him here earlier, so which was very enthusiastic, and with much more acclaimed session we had last time, and we are lucky to have him again today for this one of the most important topic, because so many changes has been made during last month and notified on 1st October 2021. So I welcome you, Dilip Phadke ji. So I hope our members will enjoy your session, and I'm wishing the best of luck to you. Thank you very much.
Lakshmi ji, can I start?
Yes, sir. Please, sir. Yes, please.
So, to start with, first of all, I thank FTCCI for inviting me to give the lecture on the amendments which are there because of the 45th GST meeting. Irshad ji was the person who invited me, and Lakshmi ji followed it up continuously. So, first of all, I thank
బాగుంటుంది స్వీట్ గా
Bhaskar Reddy ji,
అలాంటి నేటివిటీతో తెప్పిస్తే బాగుంటుంది. అదే అదే
the chairman,
లోకల్ ఫుడ్
and
స్టైల్.
president, then my colleague, Sri Sudhir, partner of Madhukar King and Associates, the Tirumalai, who is present in absentia, and my friend Muhammad Irshad. Today I am going to speak on the 45th meeting of GST regarding the amendments, notifications, circulars, and clarifications. Now, what this particular 45th meeting has done, let us try to see. Now, regarding the questions, I will be taking them up at the end, because the flow of the lecture I'll try to avoid. So whatever are your questions, we'll discuss them at the end, where Sudhir will be also available with us to discuss those questions. Now, in this particular meeting, the decisions were taken for increasing the rates of taxes. Now, why there was a necessity of increasing the rates of taxes? Now, government is trying to come up to a scenario where there will be only 3 rates of tax. So, they are trying that as many commodities as possible, as well as services as possible, shall be shifted to 12%, 18%, and 28%. So what will be the rates afterwards that we will be observing? The second point is regarding they are trying to see that the inverted duty structure is avoided. So because of this, they try to increase the rates. The reduction in the rate, as per the necessities, social responsibilities, and wherever necessary, because of the demand, if possible, they reduce the GST rates. Every time there is something new about the refund, because they try to delay the refunds as much as possible, but this time they have come out with the circular, which is making it easy to take the refund. There are certain aspects regarding ITC also, and there are changes regarding the compliances. Now, when I say compliances, nowadays the CA's practice is of only two kinds. Either they do compliances or they do the appellate and other work. So compliances, every now and then they change on, and whatever is there in the law we have to follow, as well as whatever is allowed by GST portal. It is called as common portal, but it is not common. This portal has its own law and its own rules. So the compliances, we have to deal with that portal. So those changes, there are some, and there are some other changes which are there, and they have come out with many clarifications. Wherever there was a confusion, AAR, that is the appellate, the authority, advance ruling authority. I don't call it as advance ruling authority, it is adverse ruling authority. So adverse ruling authority gives different kinds of judgment. The advance ruling authority of Maharashtra will give one kind of judgment. Then Karnataka, it will give some another kind. So if there is a confusion, either Supreme Court, High Court, or the Council has to come out, which is the correct view. So those compliances and those clarifications are also there. Now, because of this 45th Council meeting, they have issued one press note. There are 6 circulars. There are notifications of rate CGST 7, IGST 7, UTGST 7. There are 2 notifications, and GST minutes, GSTC minutes are not yet uploaded. So we are going to deal with this all. What are they? Notification number 6, amending GST rates for certain services. Notification number 7, amending exemptions of certain services. 8, amending GST rate for goods. 9, amending exemption for goods. 10, introduction of RCM on certain goods. 11, amending notification 39. 12, exemptions, COVID-related medicines. 35, amendments of the rule for Aadhaar and authentication. Then 36, amends exemption from Aadhaar authentication to the Department of Central Government, State Government, etc. These circulars, that is 159 to 164, I am going to discuss in details because it has got longer or lasting or changing effects. First is 159, intermediary. Second is regarding debit notes. It is not regarding credit notes, it is only regarding debit notes. Circular number 161, distinct persons. 162, wrong payment of taxes. IGST paid as CGST, AGST, etc. Then clarification on the rate relating to the goods, that is 163. And circular number 164, clarification on the rate related to the services. Now regarding the first, that is notifications for the changes in the rate, I'm going to deal with briefly, because over there I have to just say that these rates are increased, these rates are reduced, all that, because the reasons why there are changes that already I have discussed. So let us see first. Increase rate. Now these rates have increased from 1st of October 21. Ore and concentrate of the metals such as iron, copper, aluminium, zinc, and few others, they increased it from 5% to 18%. Specified renewable energy devices, they increased from 5% to 12%. Cartons, boxes, bags, packing containers of papers, etc. Previously it was 12 or 18%. Now they have made it flat 18%. Waste and scrap, polyurethane and other plastic, they increased from 5% to 18%. All kinds of pens, they increased from 12% to 18%. Railway parts, locomotives and other goods in Chapter 86, they increased from 12% to 18%. Miscellaneous goods of paper like cards, catalog, printed material, Chapter 49, they increased from 12% to 18%. Unintended waste generated during the production of fish meal, except for fish oil, they have explained that it is nil for the period July 17 to September 19. So that is the explanation which is there. Decrease in rates. This is in respect of the goods. Fortified rice kernels for the scheme like integrated child development schemes, they are reduced it. Social responsibility from 18% to 5%. Medicine for treatment of cancer, again for the help of the ill and sick people, 12% to 5%. Biodiesel supplied to oil marketing companies for blending with diesel, they have reduced it from 12% to 5%. IGST on the import of medicines for personal use, namely, so there are all those names I can't pronounce, they are medical names. So they have made it nil from 12%. Then if there is any bazaar haat on the borders of Indo-Bangla, previously it was to be sold at the applicable rate. Now they have made it nil. Retrofitment kits for the vehicle used by the disabled, it was previously applicable rate. Now they have made it 5%. Now 19 drugs, they have extended the reduction of the rate, that is from, they were applicable, the reduced rate were applicable up to 30th September. They have increased it to 31st of December 21. So it includes remdesivir, D-glucose and all those which are there. COVID related drugs, that is remdesivir, tocilizumab, etc. They have reduced it. Now, this particular reduction which they have done, they have extended it up to 31st of December 21. Reduction in the rate of GST services. Validity of GST exemption on the transport of goods by vessel and air from India to outside India. This is extended up to 30th September 22. You can refer to notification number 12, entry number 19A and 19B for this particular purpose. Services by way of grant of national permit to the goods carriage on payment of fee from 18% they have reduced it to nil. Skill training for which government bears 75% or more of the expenditure. Up till now, the exemption applied only if government funded 100%, but now they have said that government funds 75%, then also the exemption will be available for skill training. Services related to AFC Women's Asia Cup 2022, from 18% they have gone to nil. Now, the miscellaneous changes, either for the purpose of portal or compliances. Composition scheme for the bricks, they have brought in the composition scheme. Now, this scheme will be applicable only up to the limit threshold 20 lakhs. This will be applicable from 1st of April 22. Now, what is the composition? Composition is the bricks can be sold at 6% flat without any ITC. And if they want ITC, the GST rate which will be applicable will be 12%. Now, over here, let us understand that bricks are required by construction industry. And in construction industry, we don't get any set off or ITC. So basically, if they get the bricks at a lesser price, because from 12% if the tax rate goes to 6%, the value or cost of the bricks will be reduced. So that's why this particular composition scheme is there. The another reason for the composition scheme is these brick manufacturer, brick cleans, as we call it, are carried on by the persons who are small. It is basically made of mud. And these cleans are belonging to these people. So they are unorganized sector. So for these two reasons, they have brought in this composition scheme, which will be effective from 1st of April 22. Now, there are inverted duty structures in two sectors, that is footwear as well as textile sector. The GST Council meeting has not taken any or implemented any decision for the changes in rate to avoid inverted duty structure, but they have deferred it and they have said that it will be implemented with effect from 1st of January 2022. In respect of directions from the Kerala High Court, they had said that the petroleum products should be brought under the GST. But according to GST Council, it is not appropriate to do that from now. Now, basically, most of the government's revenue, state government, I will say nearly 40 to 50% of the government revenue comes from the tax on diesel, petrol, and others. Now, do they require, similarly, the central government also? Because they charge excise, similarly, they charge the GST. So basically, they have said that just now it is not appropriate. So when it will be taking place, they will announce it afterwards. Now, if you refer to section 9.1 and 9.2, you will find out that only the liquor is not in the GST regime. Diesel and petrol is there in the GST regime, basically because it is given in 9.1, 9.2. And if at all they want to bring it to the GST net, it is not at all necessary for the government to change the law. They can do it by notification. So that is regarding the petrol. Rates for services. Temporary or permanent transfer or permitting the use or enjoyment of intellectual property rights. Now over there was a wording, right in respect of goods other than information technology. Now they have removed that is in respect of information technology, and from 6% they have brought it to 9%, that is total, we will call it as 18%. 9% CGST means 18% total. So now the entry reads as temporary or permanent transfer permitting the use of enjoyment of intellectual property right. So there is no exception, nothing. All the property rights, enjoyment or use will be taxable at 18%. Then licensing services, the right to broadcast and show of original film, sound, recording, etc. So again, I told you to bring the parity. They have increased it to all as 18%. So 18% is actually applicable for licensing services, the right to broadcast and show original films, sound recording, radio and television program. So this is all taxable at 18% now from 1st of October. Services by way of job work in relation to. Now this is in respect of entry 26, notification number 11 of 2017. Previously, it was 2.5%. All food and food products falling under chapter 1 to 22 in the first schedule. Now they have said that we will be seeing it separately, that alcoholic liquor is not food and food products. So if there is any job work done by a job worker to a manufacturer of liquor, the rate will be 18% from 1st of October 21. Now printing, notification number 11 of 2017. Now the previous entry they have cancelled, entry number 27, and they have brought in 27(2). Other manufacturing services, publishing, printing and reproduction services, materials, recovery services, all these will be taxable at 9 plus 9, 18%. Then from 1st of October 21, they have made two categories of entry to the various amusements. So admission to the theme park, water park and any other place having joy rides, merry-go-round, go-karting, ballet, etc. The rate of tax is 9% plus 9%, 18%. They have added 3A now. And they have said that services by way of admission to casinos, race clubs, or any place having casinos or race club or sporting event like IPL, the tax rate will be 14% plus 14%, 28%. So admission to the amusement park having rides, etc., attract 18%, but 28% will be applicable wherever there is casino, race club or IPL. Now exemption to the services. From 1st of October 21, they have exempt certain services. Services by way of transportation of goods by an aircraft from custom station of the clearance in India to place outside India. So now they have said the rate will be nil. Nothing contained, what are the conditions? Nothing contained in this serial number shall apply after 30th September 22. So they have increased it up to 22. It was available up to 30th September 21, they increased it to 22. Similarly, the next, that is services by way of transportation of goods by a vessel from custom station of clearance in India to a place outside India, they have extended it up to September 22. Now, carton boxes, this we are going to take in details in clarification. So they have made it 18%. Now, pens, 18% instead of 12%. Now see how many kinds of pens are there. Ballpoint pen, felt tipped and other porous tip pens and markers, fountain pens, stylograph pens, other pens, duplicating stylos, pen holders, pencil holders and similar holders, parts including clips, caps of the foregoing articles. So for all these, they have made it from 12% to 18%. Caffeinated beverages, previously it was 28%. Now they have said that carbonated beverages of fruit drink or carbonated beverages with fruit juice. So FDA has come out with the permission to mix fruit juice with the carbonated beverages. So they have increased the rate to 28% because the manufacturers were taking advantage that this is a fruit drink. So they say that if it is carbonated beverages with fruit juice or of fruit juice or fruit drink, then it will be directly 28%. And there will be a cess of 12%. It is specifically stated in the rate schedule. Now, mentha oil. Generally, the mentha oil is used for manufacturing perfumes and it is required by these types of industries. Now, generally, this mentha oil is manufactured by unregistered people and it is used by the manufacturers of the perfumes and others. So they have come out with the notification. Notification number 4 is amended. So they have said that following essential oils other than those of citrus fruit, namely of peppermint, mentha peppermint, of other mints, supermint oil, watermint oil, horsemint oil, bergamot oil, all these are, I was not knowing so many names of mint oils. So all these types of oils, if you purchase from an unregistered person and you are a registered person, the registered person will have to pay the applicable tax on them under reverse charge. Now they have specifically provided that supply of mentha oil from an unregistered person is brought under reverse charge, and Council also recommends that export of mentha oil should be allowed only against LUT and consequential refund of input tax credit will be allowed. So basically, this is a new entry for the purpose of reverse charge of goods. So already there were 7. Now there are 8 items of goods on which the reverse charge is applicable. Now, what are the changes in compliances? Where we have to deal with the portal. And if the portal doesn't allow you to do anything, you can't do it. That is definite. Everybody knows it very well. So what they have said, that from 1st of January 22, Rule 59(6) it changed. And now the portal will be also implementing it. If you don't file GSTR1, if you don't file the GSTR 3B of January 22, you will not be allowed to upload GSTR 1 of February 22. Now, as such, no liability arises when you file GSTR 1. Then why they are coming up with this prohibition? Now, if you don't pay the tax, if you don't file 3B, means what? It means that you have not paid the tax. So you have not paid the tax for January 22. Already you uploaded GSTR 1 of January 22. The purchasers to whom you have sold these particular items or provided the services have got the credit because it will appear in their 2B. So what they have done? They have said that if you don't file previous month 3B, next month GSTR 1, you will not be allowed to upload. So automatically, February, if you are unable to upload, your customers will come to know that you have not paid the taxes of January 22. That's why you are unable to upload GSTR 1 of February. So that will make a cross-check on the suppliers. So that is the purpose of bringing in this particular amendment. Now late fees, up till now they were not getting auto-populated. Now you will find that the late fees will be auto-populated in the next GSTR 3B. So if you delay any of the returns for the month of January, then automatically in the GSTR 3B of February, your late fees will be calculated and they will be auto-populated. And as you know, unless until you pay them in cash, you will not be allowed to upload GSTR 3B. Job work. Now ITC 4 is the return to be filed by the manufacturer who gives some part of the process to the job worker. So material sent to job worker and received back is the list or the ITC 4 which is there. Now what they have done, they have made it little easy or simpler. Previously it was necessary to upload it quarterly. Now what they have done, the taxpayers having annual aggregate turnover exceeding 5 crores, they have to file it only twice in a year. Now, September already you must have filed. So, you will have to file it directly for March now. Then, taxpayer having annual aggregate turnover below 5 crores need to file it annually. So if you already filed September, this year you will have to file 2. But if you have not filed it, annually 1 for the financial year 21-22 and subsequent years will be possible. Now remember, whatever I am telling you is regarding only balance in cash ledger. It is not applicable to balance of ITC, that is credit ledger. So if you have got an unutilized balance in cash ledger, generally it was necessary for you to claim refund by filing RFD1. But now they are allowed a transfer if there are two GST numbers of the same PAN holder without going through the refund procedure. For this, they have given certain safeguards. So the transfer between distinct persons, but remember one thing, I am not clear. According to me, it is not available in the same state, because nowadays distinct person can be there in same state also, but distinct person in different states are there. Let us say Maharashtra and Tamil Nadu. What will happen? Same person is having two places. He is having certain cash balance in Maharashtra. Previously, it was necessary to take the refund and pay the amount in Tamil Nadu. Now, he can transfer it directly. Then other authentication. Other authentication will be necessary or mandatory if you want to file a refund application or you want to file registration application. Similarly, when there is a refund due, the refund will be disbursed in a bank account which is linked with the same PAN on which registration has been obtained under the GST. So that is change. Previously, they were doing it, whatever bank account number is given, they were transferring it. But now they will see whether it is linked with the same PAN number, and then only they will be given the refund. Now you know very well that you are getting as on today ITC 5% more than whatever is given to you in 2B. But now they will be restricting it only to the extent whatever is available or appearing in GSTR 2B. So 5% additional, previously it was 10%, before that it was 20%. All this will go. And now you will be entitled to the ITC only if it is appearing in 2B. Now interest, availment and utilization. What is the difference? Suppose I take or purchase a car and by mistake, because I forget section 17(5), and I take the credit of that ITC. I will show it in 3B. So I have availed the ITC. But suppose if I don't use it, I reverse it, no interest will be payable. So when the interest will be payable? The interest will be payable only if you avail wrong credit and use it simultaneously. So if you, in short, I'll say that if you avail ineligible ITC, the interest will be payable by you at 18% with effect from 1st of July 2017. Now, GST Council has suggested certain cross checks and other changes also. So they have recommended certain changes in the Act and rules, the details of which they are not published. Then they are recommending, for the purpose of curbing the use of fake invoice for the getting the ITC, what they are suggesting. They are suggesting that using the technology, including monitoring through improved e-way bill system, e-invoices, fast-track data. Similarly, strengthening the institutional mechanism for sharing of intelligence and coordinated enforcement actions by the center and the states. So these were the changes in rates and other, that is compliances and portal related changes. Now we are going to start with the clarifications, and clarifications are there in 163, 164. Already I have completed half an hour. Now in 1 hour, I will be going through these circulars which are there, that is from 159 to 164. Now certain circulars were taken out on 20th of September, certain circulars on 25th of September, and certain on 6th of October. Now intermediary. Many people who are doing the business, especially with foreign customers, are having a lot of problem regarding understanding intermediary. Now, to understand it and make it simple, they have come out with circular 159 /15/21 dated 20th September 21. Now, intermediary has been defined in section 2, subsection 13 of IGST Act as a broker. Now read the wording. Intermediary means. So it is not an inclusive definition. You cannot expand it. Means only this much. So means broker, an agent, or any other person by whatsoever name called, who arranges or facilitates the supply of goods or services or both, or securities between two or more persons, but does not include a person who supplies such goods, services, or both, or securities on his own account. So if we try to bifurcate or dissect this particular definition, we will try to understand something. Now, as per GST law, securities is not goods or service. But if a broker, let us call them a share broker, if a broker is arranging any transaction for you and he is charging you brokerage, then he becomes intermediary. So the transaction in securities, if there is a broker, then it will be called as an intermediary. So let us try to analyze it. This analysis, you will understand that if there is an intermediary, there will be three parties. Now, which are the three parties? The first party will be the supplier. The second party will be the purchaser or recipient. Other than these two, there will be one person who is facilitating it. So, the supplier, recipient, or purchaser is main pillar of the transaction. And to facilitate the transaction between these two, there is a third person doing some activities. So that particular person, that is the third party, is the intermediary. So now there will be two supplies. If there was no intermediary, seller would have sold it to purchaser. But now, if the intermediary is giving services to purchaser, Then there will be a second supply from intermediary to purchaser of services. If he is facilitating to the seller or supplier, then there will be a second transaction of supply of services between intermediary and the seller. So the third party will be the agent of the broker. Then if any work is done by the intermediary on his own account, then that will not be treated as intermediary service. So if he is acting as a principal to principal, we'll be seeing it how. Then there will be no question of intermediary. And if there is any subcontracting, then also there will not be any question of intermediary. So these points, if we discuss further, let us try to see it. Now, minimum 3 parties, that is the first thing. Already we have discussed that supplier is one, purchaser or receiver is second, and the person who is facilitating it is the third. So facilitating becomes ancillary supply, and the transaction between the main supplier and main purchaser or recipient becomes the main supply. So 2 supplies, 3 persons. That is the method how it takes place. So supplier through agent finds out the customer. Now what will happen? Because supplier A has got a customer B, because C has located it, then in that case, he will be an agent helping A to locate B. Who will supply the material to B? A will be supplying the material to B. C is not doing anything. So main supply from A to B, but services are given by C to A for searching the customer B. So there are 2 distinct supplies, which we have already seen. That is transaction between the 2 main principals, supplier and a purchaser or recipient, is the main supply. And whatever facilitation is done for arranging the main supply between the 2 principals is ancillary or intermediary services. So supplier and purchaser, seller and purchaser, supplier and receiver are the main supply, principal to principal basis. And whatever are the services provided by the agent or middleman, let us call it, are intermediary services. So intermediary service provider means a broker or an agent or any other person whatsoever name called. So already we have seen this in the first slide itself. Intermediary does not include a person who supplies such goods or services or both securities on his own account. So if the intermediary or if I do anything on my own, then I will not be called as an intermediary. So the use of the word such in the definition is the main supply. So for carrying out that main supply, if somebody is doing something to see that such principal supply takes place, then it is a subordinate supply, ancillary supply, and then he becomes intermediary. So intermediary, why it is important? That we'll be seeing it. Let us take some example. First, I said that if anybody is doing anything on his own, he is not an intermediary. Now subcontracting. Now subcontracting, if it is, let us say, there is a supplier A who has supplied machine to B. Now A wants that he has given the AMC. So for the AMC, he wants some person to work and go to B and do the work of AMC, that is repairing and other things. Now let us say he appoints C for doing that work. Now C will be actually going to B and working over there. But is C doing the work of B? Answer is no. To whom C will bill? C will bill it to A. And A will bill it to B. So now there are two supplies. One supply made by C to A as a principal. And second supply made by A to B again as a principal. So there is no question of intermediary when the work is subcontracted. There is a specific provision for the place of supply under section 13 and subsection 8. It will be invoked only when either the location of the supplier of intermediary services or the location of recipient of intermediary services is outside India. So let us see certain examples. Now, the type of service is finding a customer or a service provider. Whether such services are intermediary, answer is yes. So this will fall under intermediary. Arranging a service provider. So he is not directly supplying the service. He is arranging a service provider. So again, it will be falling under intermediary. Customer care service. Now, customer care service, is it an intermediary? Answer is no. Here there is no question of intermediary. He is directly giving the services on principal to principal basis. So there will not be question of intermediary over here. Partial supply of services of design and development of software. Again over here he is developing and designing the software. So here there will not be any question of any intermediary. Supply of backend services. If you supply backend services, then it is not a work of intermediary. Even where a supplier supplies IT services to the customer of his client on client's behalf, but actually supplies these services on his own account, the supplier will not be categorized as intermediary. So, backend services, if given, they will not be intermediary. Support services during pre-delivery, delivery and post-delivery, it will be intermediary services. Now, if you combine these two, whether it will be an intermediary service or not will depend upon the facts and circumstances of the case. So we can't say it directly. So that was regarding the 159, that is who is intermediary. I have not tried to explain the provision for taxation of intermediary, but in short I tell you that if there is a intermediary in India giving any services in India, then even if he gets the foreign exchange from the supplier who is situated outside India, but because the recipient is in India, then it will be taxable to local taxes, that is CGST, SGST. Already, as you are doing business, you are having the knowledge of it, so I am not trying to explain it further. Time limit for debit note and other changes. So this is circular number 160/16 of 21, dated 20th September 2021. What is the memorandum? The intent of the law, as specified in memorandum explaining the Finance Bill 2020, states that clause 118 of the bill seeks to amend subsection 4 of section 16 of the CGST Act so as to delink the date of issuance of debit note from the date of issuance of underlying invoice for the purpose of availing the input tax credit. So that was the memorandum. Now what changes they made in section 16(4)? They made the changes like this. A registered person shall not be entitled to take input tax credit in respect of any invoice or debit note for the supply of the goods or services or both after the due date of furnishing the return under section 39 for the month of September following the end of financial year to which such invoice or invoice relating to such debit note is now omitted. So now it is financial year to which such invoice or debit note pertains. Previously it was if debit note is in respect of an invoice which is of the past date. Let us say the date is let us say 12th of May 2018 or 19, and I give a debit note now, that is October 21. Is it time barred? Answer is no. I can issue a debit note now also. But previously what they were doing, they were relating it to May 19, and they were saying that this particular ITC of the debit note will be available only up to the September, which is coming after March 20. That is September 20. Return filed on 20th October 20. You will not get the credit. So let us see what is the provision. The availment of ITC on the debit note in respect of amended provision shall be applicable from 1st of January 21. Accordingly, for availment of ITC on or after 1st January 21, in respect of the debit note issued prior to or after 1st January 21, the eligibility of availment of ITC will be governed by amended provision of section 16(4), whereas any ITC availed prior to January 21 in respect of debit note shall be governed under the provisions of section 16(4) as it existed before said amendment. So let us take a simple example. Suppose the date of invoice is 15 July 19 and debit note is issued on 30th of January 20. So both of them fall in the financial year 1920. So what will be the date up to which you can take ITC? September 20 return, that is 20th October 20. Let us take another example. Second, the date of invoice is July 19 and date of debit note is November 20. Now financial year for 1920 is invoice. Financial year for debit note is 2021. Now you will see that now you can take the ITC up to September 21. Now you might say, how? Because actually it should have passed because the debit note is in November 20 before the date of this particular amendment. But if you have understood the previous paragraph, you will understand that this particular debit note is falling into the financial year 2021 when this particular amendment is passed. So for this particular type of debit note, the ITC credit will be available for an extended time up to September 21. If the invoice date is 16th March 20 and the debit note is issued on 4th of March 21, then again it will be September 21, that is October 20th. Date of invoice 16th March 21. Date of debit note 7/7/21. Now when it falls, in which financial year it falls? It falls in 21-22. So the September after 22 March, that is September 22. So the credit will be available till you file the return of September 22, that is 20th of October 22. Now there is a change regarding the physical copy of the invoice. So what is that? Let us try to see it. Now, the physical copy, as per section 138(1) of the CGST, it said that along with the conveyance, you have to carry three things: invoice or bill of supply or a delivery challan, along with the e-way bill. So when to carry the invoice, when to carry the bill of supply, and when to carry the delivery challan, we already know. Or it can be a copy of e-way bill or e-way bill number, either physically or mapped to a RFID embedded onto the conveyance in such a manner as may be notified. Now, with effect from 1st of October 20, it is not 21, 1st of October 20, as per Rule 138A, in case invoice is issued in manner prescribed under 48(4), because this particular 48(4) was amended from 1st October 20, and that particular invoice, let us call it as e-invoice, QR code and IRN is necessary. So if an e-invoice is having a QR code and IRN, then what they say? It states that whenever e-invoice has been generated, the QR code and IRN is there in it, then if this is there, then physical copy of such e-invoice is not necessary. So now you carry the e-way bill and e-invoice, you can carry it on your mobile also. So that is the provision, which is a welcome provision. And now let us go to the another change in this circular only. Section 54(3) is regarding the refund. It provides that no refund of unutilized ITC shall be allowed in case where the goods exported out of India are subjected to export duty. Now, what is the meaning of subjected to export duty? Now, there are certain items which you export which are not liable for export duty, either because it is specified in second schedule of the Customs Tariff Act 1975, or they are fully exempt from payment of tax of export duty by virtue of custom notification or Custom Tariff Act. So over there, you don't pay anything. You are not liable to pay any export duty. Now, whether in such cases you are entitled for the refund or not. Now it is clarified that only those goods on which some export duty has to be paid, so actual payment is necessary, will be covered under restriction imposed under section 54 subsection 3 for availment of refund of accumulated ITC. So that is the provision, which is a welcome provision, that if there is no export duty payable by you, then there is no question of losing the refund. So that is 160. Now 161/17 of 2021, dated 20th September 21. Now what is the meaning of distinct person? Now distinct person comes into the picture in case of many places. If I am in Maharashtra and I have got a branch office in Karnataka, the two numbers will be separate. That is, GST numbers will be separate. And these two numbers, even if owner is one, it will be treated as distinct person. So if there is any transaction between these two persons, there has to be a tax. But this changes a little bit when it is an export. So in case of export, what happens? Export can be zero rated, can be for export or SEZ. Now in respect of export, it can be export of goods or export of services. Now export of service means what? Export of service has to fulfill these 5 conditions, which already we know. As the time is 5:20 and the time available to me is 5:45, and still I have to go through nearly 5 more circulars. I'll try to drop certain things which are not necessary. So only important point I'll take up. So 1, 2, 3, 4, that is supplier service located in India, recipient outside India, etc. You know. But point number 5 is important from the viewpoint of distinct person. The supplier of the service. So it is applicable to services only. It is not applicable to export of goods. Supplier of service and the recipient of service are not merely establishment of a distinct person in accordance with explanation 1 in section 8. So already we have seen what is a distinct person. So if you are distinct person, that is your owner is same, one is in foreign and one is in India, and you supply service, because of this section 5, it will not be treated as export of service. Now if you look at the definition of person, there are 12 categories. One of them is a company. So company which is registered in India. And each category of person is any body corporate incorporated by or under the law of country outside India. So C is company incorporated in India. Now let us see what is any body corporate which is outside India. So that also we'll be seeing. A company means a company incorporated under this act or under any previous provisions of the previous Companies Act. Foreign company means any company or body corporate incorporated outside India which has a place of business in India, whether by itself or through an agent, physically or through electronic mode, and conducts any business activity in India in any other manner. So this is foreign company which is defined under subsection 42 of section 2 of the Companies Act. Now, if we go back, what is a distinct person? Explanation 1 says that section 8, for the purpose of this act, where person has an establishment in India and any other establishment outside India, an establishment in the state or union territory. So let us forget about 2 and 3. So if there is an establishment in India and there is an establishment outside India, then it will be treated as a distinct person. Now, when they are treated as a distinct person, then export benefit will not be available. Explanation 2 says that a person carrying on the business through a branch or an agency or a representational office in any territory shall be treated as having establishment in that territory. So you are having a branch, or you are having an agency, or you are having a representational office, then where it will be located? It will be located in India. Now, how the business is done for the purpose of export? One establishment will be there outside India. There will be a place of business, a representational office, branch office, local office in India. Or another method, there will be a wholly owned subsidiary in India. So let us see what is the difference between these two. Section 25(4) and 25(5), which is there for the purpose of registration, states that a person who has obtained or is required to obtain one or more registration, whether in one state or union territory or more than one state or union territory, in respect of each such registration, shall be a distinct person for the purpose of this act. This already we have discussed. 25(5) says that where a person who has obtained or is required to obtain registration in a state or union territory in respect of an establishment has an establishment in other state or union territory, then the such establishment shall be treated as an establishment of a distinct person. Now, if you refer to Schedule 1, if there is any transaction between a distinct person, then even if there is no consideration, it will be treated as a supply. So tax will be payable. So if a distinct person in foreign and one distinct person in India, there is an export. According to Schedule 1, it will be taxable, but whether it will be export, that's what we have to see. Now, if you refer to the local office, representational office, or a branch or an agency in India, then in that case, it is not a company separately established in India. And there is a transaction between foreign company and the representational office or a branch office in India, then it shall not be considered as an export of service. That is the analysis of para 4 of the circular. Now let us go when it will be not treated as export. So foreign setup deals with a local office or a branch office in India. It will not be treated as a export of service. So when it will be export of service, now we are seeing that Indian company and foreign company, they are separate. So a company incorporated in India and a company incorporated outside India are separate persons. And they are not to be considered as merely establishment of distinct persons as per explanation 1 of section 8. So if supply of service by a subsidiary or a sister concern or a group concern incorporated in India under Companies Act to the establishment of foreign company located outside India, which is incorporated outside India, would not be barred as an export of service under subsection 6 of section 2, subclause 5. So, in this case, it will not be treated as a transaction between distinct persons. It will be treated as export. So if there is a foreign company and there is a wholly owned subsidiary in India, then if there is a transaction between these two, it will be treated as export, and benefits of export will be available. Now let us go to circular number 162, refund of the tax. 77(1) CGST and 19(1) IGST. This is given in section circular number 162/18 of 2021, dated 25th September 21. Now, what is 77 of CGST? Let us see, because 19 is corollary of that. Tax wrongly collected and paid to the central government or state government. A registered taxable person who has paid CGST and SGST or UTGST on a transaction considered by him to be an intrastate supply, but which is subsequently held to be interstate supply. So while paying the taxes, while filing the return, he treated the transaction as intrastate supply. But subsequently it is held that is an interstate supply. So he has paid wrong CGST and SGST. Shall be refunded the amount of the taxes so paid in such manner and such condition as may be prescribed. So you have to file for the RFD 01 and you will be allowed the refund. There is a subsection 2 that a taxable person who has paid wrong tax, he has paid CGST, HGST, actually IGST was payable, then he has not to pay any interest while paying IGST. So that is subsection 2. That is, no interest will be payable if you have paid the tax wrongly earlier and subsequently you found out that whatever you have paid was wrong. Now the question arises, what is the meaning of subsequently held? Now subsequently held can be of two cases or two ways. First is the person himself finds it out. So while the audit was being done or while he was checking the bills or his customer informed him and he found out that actually the transaction was interstate, but he had charged locally, it will be treated as subsequently held. So suo motu finding of the dealer. Or sometimes it can be found out by departmental authorities. The assessment authorities will find it out at the time of assessment by the tax officer in some proceeding. Now in this case, it will be held as subsequently held in suo motu finding or finding by another outside officer. Both the cases, will be the date which is after the filing of the return. So it will be subsequently held. Now, Sub-Rule 1A is inserted with effect from 24th of September 2021. Now this date is important, 24th of September 2021. Now what is that rule? The rule says that any person claiming refund under Section 77 of the Act of any tax paid by him in respect of a transaction considered by him to be an intrastate supply, which is subsequently held to be an interstate supply, may, before expiry of period of 2 years from the date of payment of the tax on the interstate supply, file an application in form number GST RFD01 through common portal, provided that the said application may, as regard to any payment of tax on interstate supply before coming into force of this sub-rule, be filed before expiry of period of 2 years from the date on which this is enforced. So enforcement date is 24th of September 21. So 2 years from 24th of September 21, that is 23rd of September 23. Now let us take some examples. A taxpayer A has issued a tax invoice on 10th of March 18, charging CGST and SGST on the transaction and accordingly paid the applicable tax CGST and SGST. Now following scenarios are there. Subsequently held. So what the date of subsequently held is what? 10th of May 21. What will be the last date? It will be 23rd of September 23. Why? Because 10th of May 21 is the date on which it was found out. So actually 2 years are over on 9th of May 23. But as we have seen, that 2 years will be counted from 24th of September 21. That's why the last date for making the application will be 23rd of September 23. Suppose subsequently held on 10th of November 21. Now you have found out the mistake after the 24th of September 23. Then in that case, 2 years will be counted from 10th of November 21. So it will be 9th of November 23. If the subsequent date is 10th of May 19, now again, the date up to which you can make application will be 23rd of September 23. Suppose it is done on 10th of November 22. The last date will be 9th of November 24, which will be counted from 10th of November 22. So that is regarding the application. Now, madam, I'll require another, if I go fast, I'll require another half an hour.
Please carry answer.
Or shall I finish it fast? Deccan Queen speed also I can do it within 10 minutes.
No, you please explain the things properly now.
Okay. So let us see this particular two circulars. 163/19 of 2021, which is issued on 6th of October 21, covers 12 items. They are clarified. Now, clarified is a little bit dangerous word. Have they clarified the things or they have created a confusion? That we'll come to know afterwards. Now, clarification is binding on the department. So all the department people will be following this clarification. So if you want to go against this clarification, you should be ready for going to the higher authorities in appeal. If you have got contrary view. Now the circular, which are clarificatory, unless until otherwise it is stated, they don't change any law. They don't change any rules. What they do, they clarify the position which is there of the law or the rules. So from what date it will be applicable? It will be applicable from 1st of July 2017. Now, the starting statement of all these circulars, that is 159 to 164, which are issued by CBIT GST Policy Wing, start with a statement. What is the statement? In view of the difficulties being faced by the trade and industry, and to ensure uniformity in implementation of provision of the law across field formation, the board, in exercise of its own powers conferred by section 168(1) of the Central Goods and that is CGST, hereby clarifies the issue in succeeding paragraphs. Now, can you tell me why these clarifications were not brought out within 2-3 months of July 17? Why they were brought now? They are brought now because now the assessments have started. So while doing the assessment, the field formation, the persons who are doing the assessment should have the full knowledge. That's why these clarifications are there. So let us see whether they are creating confusions or they are clarifications. Nuts. They have given a clarification regarding nuts. Now, this particular PowerPoint, I'll ask them to circulate for those persons who are attending, so that whatever I have written over here, because these are the remarks which are made by the GST Council for giving that clarification. What is the effect of that? I am discussing it in subsequent slides. So what is the comment of the your CGST GST Council? If important, I'll read. Otherwise, you can read it afterwards. Now, nuts can be fresh. Sometimes the chilled nuts or fruits are also fresh. They are frozen sometimes. Blueberry, blackberry, you get frozen. Sometimes they are dried. So what they say? They say that fresh is what is taken from the tree. If you process by any method after that, then it will lose the character of fresh. So fresh fruits or nuts are those products which are not frozen or dried in any manner as stated above, or they are not otherwise processed. So even sun drying in certain cases will be treated as a different commodity. Suppose you want to do dehydration of certain vegetable for making them lasting longer, then they are product of a different type. So what they say, if you have done any process on the fresh nuts, now which are the nuts? Almond, then cashews, pista, all these are nuts. So if you have carried out any process on these nuts, then they will fall under the heading 0801 or 0802, and they will attract the tax rate of 5% or 12% as the case may be. Tamarind seeds. Now, I was not knowing that there are so many kinds of seeds. See, I'll just read. Ornamental flower, vegetable seeds, seeds of the forest trees, seeds of the fruit trees, seeds of the hedges or lupins. So there are so many seeds. Now what they say? If you sell the seeds, tamarind seeds or any other seed, for the purpose of sowing only, then only it will be tax free. If you sell it for any other purpose, that is for taking out oil or some other process, mixing it with some food, if you sell it for that, then the tax rate will be 5%. So, tamarind or any other seed was nil rate up to 30th September 21. Now from 1st October 21, what you have to see? Whether you are selling these seeds for the purpose of sowing. If you are selling it for the purpose of sowing, then there will not be any tax. But if you are selling it for purpose other than sowing, then the tax rate will be 5%. Copra. Now, copra, Lakshmi Madam will be able to explain it better. But I'll say wet coconut and dried coconut is the difference. Wet coconut in kernel or fresh or dried is coconut. Copra, which is dried and taken out from the shell, either whole or broken, are the two categories they have made now. And what they say, exemption available to coconut, fresh or dried, whether or not shelled or peeled, while entry at serial number 47 of notification 2 of 17 is not available to copra. Accordingly, copra classified under head 1203 attract GST rate at 5%, while entry serial number 66, schedule 1 of 1/2017 central tax rates dated 28th of June 17. So if it is a copra, it will be taxable at 5%. Henna. Now, henna is generally used for the manufacturing mehndi paste. Now, mehndi can be used for drying the hair, or they can have designs and many things on your body. So what is the clarification? Henna powder and henna leaves having no additives is classified under tariff item 1404/1990 and shall attract GST rate at 5%. Similarly, the mehndi paste in cones falling under the heading 1404 or 3305 shall be 5%. So this is given where? In serial number 78, and this is given in serial number 78A. Scented supari, flavored and coated elaichi. So scented supari, we all know. Vimal Ilaichi, that also we know. And Baba Ilaichi, also we know. So supari is different from scented supari. Ilaichi is different from flavored and coated ilaichi. So the tax rate will be different. So cardamom, if you say, it will be tax free. If you sell it as betel nut and you have scented it, the tax rate will be 18%. If you coat cardamom with Arabic spices, silver leaf, saffron, artificial sweeteners, etc., etc., it will be taxable at 18%. Brewers spend grain. Now, generally, the distilleries or the other manufacturing industries use the grain, raw grains. And out of this, a spent grain is produced after the extract of the grain is taken out. So whatever is left after taking out the essence or concentrate is called as brewer's spent grain. Let us call it as BHG. So BHG, dried distilleries, grain with soluble and other such residues are classifiable under heading 2003-03, attracting GST at the rate of 5%. So that is the clarification. Pharma goods. Now pharma goods, they have come out with clarification. Entry number 65 of Schedule 2 of Notification CTR dated 28 June 17 refers to Note 4 to Chapter 30 of the first schedule of the Custom Tariff Act while mentioning an illustrative list. So they have given many products below it and they fall under heading 3006 that are not specifically mentioned in serial number 65 of Schedule 2. Now, according to Schedule 2, entry number 65, the tax rate is 12%. So the question was there, whether other items which are given in the list, whether the tax rate is also 12%. Now what they have said, it is clarified that the said entry 65 covers all the goods as specified in Chapter 4 and Chapter Note 4 in turn covers all the goods covered under heading 3006. Therefore, the said entry 65, all goods falling under heading 3006, irrespective of the fact that such goods are specifically mentioned in the said entry, will be taxable at 12%. Laboratory reagent. Again, there was a confusion regarding laboratory reagent. Certain laboratory reagents were not mentioned specifically. So the entry serial number 80 was saying all diagnostic kits and reagents. So what about the many reagents falling under heading 3822? It was stated that for them also, the rate of tax will be 12%. EC by DGH, Notification 3 of 2017 prescribes concessional rate of 5% for specified goods with the condition that whenever goods so supplied are transferred to other licensee or subcontractor, a certificate from Director General of Hydrocarbons, that is DGH, is to be produced. So, original import, you have got the certificate. Now you are transferring from one distinct person to another distinct person. whether giving the original certificate again from DGH is necessary. They have clarified that once you have got the essential certificate, import essential certificate issued by DGH, then it is sufficient. Every time it is not necessary for you to take fresh certificate. 2 supplies or 1 supplies. Now generally, most of us use inverters, and inverter never we purchase separately. Along with that, we have to purchase the batteries. Now inverter falls under the classification 8507. Sorry, battery falls under 8507. Inverter falls under 8504. So the question arises, what should be the tax rate? Now, according to me, it is a composite supply. It is not a separate supply. But many suppliers show the inverter value separately and battery value separately. Then in that case, they will be treated as 2 separate products. UPS inverter will be attracting 18%, and the battery value will be attracting 28%, unless until the battery is lithium-ion battery. Solar project. Now over here, the question is, on 1st of January 19, they came out with a circular saying that if it is a solar power project which contains certain material and certain service, they had given a ratio of 70-30. 70 for parts and 30 for material. Parts and material 70% and services 30%. Now, what are the renewable energy devices or parts? They are mentioned in entry 84, 85, 94 of schedule 201A, and they are taxable at 12%. And remaining 30%, that is service part, will be taxable as a service at 18%. Now, they have made a clarification that if already you have paid the taxes at 28% already, then this 70-30% or 70-30 ratio, which is made applicable for the previous period also, that is 1st July to 31st of December 2018, you have paid more, not by applying this proportion, then you will not get any refund. That is what they are saying. Fiber drums. Now these are corrugated boxes falling under the head 4819. Now they have made fiber drums from 1st October 21 onwards. All the drums, the rate of tax will be 18%. Previously, some were taxable at 12%, some were taxable at 18%. But because of this, there will not be any recovery made. This is a clarification. So it is applicable from 1st of July. So they have made it clear that there will not be any recovery made if you have paid it at 12%, but applicable rate is 18% to you. Then let us go to the services. Now actually the time left with me is already over time, and the number of attendees have also gone less. They are reduced to 35 now, madam. So let us try to see. There are 9 items, so only I will explain them and let us see. Cloud Central Kitchen, cloud or central kitchen. Now, there are many organizations or hotels which have a central kitchen in that particular city. And they have got various branches or various restaurants where they don't cook. They just make it hot and serve it. So in Mumbai, there is Delhi Darbar, for example. It has got 3 restaurants, but central kitchen is separate. So what they have said that the central kitchen, if they supply to the restaurant, then the tax rate will be 5% without ITC. So what is a restaurant service? Let us try to define it. Restaurant service means supply by way of or as a part of any service of goods, being food or any other article for human consumption, or any drink provided by a restaurant, eating joint, including mess, canteen, whether for composition or away from the premises, where such food or any other article for human consumption or drink is supplied. So that is a restaurant service. So generally there is a cooking in that particular restaurant, and that food is served, cooked food is served. So this cooking is done in cloud or central kitchen at one place, and it is supplied at another place. So if it is supplied at restaurant, it is 5%. If it is supplied otherwise, then actually the rate should be 18%. But now they have come out with a clarification that it will be 5%. So Swiggy, Jamto, the tax rate will be 5%. According to me, there will be a double taxation. Basically, the restaurant will charge 5% to Swiggy, and Swiggy will charge 5% to the customer. Restaurant will not get any ITC, as well as the Swiggy will also not get any ITC. Now, another question which is going to come over here, whether it is a service. Now, if you read properly what is restaurant service, here you will say that it is clear that takeaway service or door delivery service for consumption of a food are also considered as restaurant service. Accordingly, service by an entity, now read it clearly, service by an entity by way of cooking or by way of takeaway or door delivery or through or from any restaurant would be covered as a restaurant service, so tax rate will be 5%. Now my question is, if it is given to Swiggy, will it fall under this category? According to me, it is going to be a problem. It will not fall under this category because the delivery should be given by that particular restaurant which is manufacturing or cooking that particular food. Now, it is not delivered by that restaurant, it is delivered by somebody else. So it will become resale of food. Now, resale is not there in GST, but there will be a separate tax on that particular food which is delivered. So this is going to create another problem and time. So that's what I said. It might create confusion rather than the clarification. This is my view. You will be able to understand it when we see the ice cream parlors. Now regarding ice cream parlor, I agree a little bit. Why? Because if you purchase a pack of ice cream, you get it in 100, 200 rupees. But if you go to an ice cream parlor, they give you a scoop for how much? 100, 150. So one pack or tub which contains, let us say, 10 scoops, which is costing 200. If purchased as a resale, it's sold for 2,000 or 1,500 by them. So they are making a lot of profit. So this particular profit they wanted to tax. So what they said? They said that there is, even if there is a little bit of service, it is a resale of goods. So what will happen? The tax rate will be 18%, but there will be a credit available of the ITC. So that is the ice cream parlor. Coaching services. As the time is less, I just go through. They have said that it is recommended by GST Council that services provided by any institution, NGO, under central scheme of the scholarship for students with disabilities, where the total expenditure is borne by the government, is covered under entry 72 of notification 12 of 2017. So even if the services are provided by institution or NGO, they will be exempt. Satellite launch service, they have made it exempt. So what they say, as recommended by council, it is clarified that as the satellite launch services supplied by NSIL are similar to those supplied by Antrix Corporation, the said circular 2/1 of 2017, dated 27 September 17, is applicable to them, and it will be treated as zero rated supply. Overloading charges. Now, many a times, even the National Highway Authority permits it, overloading of the trucks. So overloading charges are charged at the toll plazas. Now, generally, these overloading charges are in the multiples, 2 times, 3 times, 4 times, 5 times, etc. So either it is a penalty or it is a toll. If it is a penalty, taxes will be 18%. But what they say, it is a sort of a toll and it will be exempt. Renting versus hiring. Now, services by way of giving on hire to a state transport undertaking or to a local body, a local authority, a motor vehicle meant to carry more than 12 passengers, an electrically operated vehicle meant to carry more than 12 passengers, this service is exempt. Now the question was whether renting of such vehicles will be taxable at 18%. Now they said that it will be exempt because according to the GST Council, the wording which is used in the exemption is supply of services is regarding the transfer of right to use the goods. So transfer of right to use the goods is both renting as well as hiring. So even rent is collected because it is transfer of right to use, which is exempt. There will not be any tax on rent or hiring. Mining rights, previously it was stated that mining rights are taxable at the same rate at which the mineral which is extracted is taxable. So now they say no, it is taxable at 18%. So from 1/7/17 to 31/12/18, And from 18 licensing services for right to use mineral will be 18%. Casinos, they have made it at 28%. There are 3 categories which are there. So what is 28% and what is 18%? 28% is applies an admission to a place having casino or race club, even if it is provide certain other activities, or admission to sporting event like IPL. So these activities will be taxable at 28%. Other admission, that is amusement park, theme park, joyride, merry-go-round, go-karting, indoor, outdoor, all will be taxable at 18%. Is beer food? Answer is no. So what they have said, if any manufacturer of beer or distillery gets the things done from outside, it should not be treated as a food, which is concessional rate for the job work. So what they have said, that now it is recommended that such job work will attract GST at the rate of 18%. So according to me, I have taken exactly 2 hours to discuss all these. So still 24 participants are having patience to listen to me. So the disclaimer, speaker is responsible for what he speaks, but not for what you understand. GST laws are changing fast and evolving at a great speed. Therefore, please finalize your view, opinions at your own peril before implementing it. For all your actions, the person executing it should be held responsible. We have taken great care and exercised professional diligence while presenting the information to you. But please feel free to bring to our notice any error or omission that you may notice for the benefit of others in future. Thanking you. So I don't think there will be any questions on this topic which will be unanswered. So still, if there are any questions, they are welcome.
Is there any questions in the chat box? Only one question is there, sir.
Hello.
One chadu.
You can ask. What is the question?
GST on aircrafts, polycaps and hatches, Board on Nageshwar Rao. Sir, after meeting over, share your PP to me.
That is left to you.
Okay, sir, finally.
So according to me, this is GST on aircraft is as it is. Whatever I said was regarding transportation by air or sea from the custom clearance to the date of dispatch, place of dispatch. So if you give it, that is exempt. That is the, so whatever are the tax rate applicable for the purpose of helicopters and all that, that remains same. There is no change in it. So I think I have tried to do the justice as much as possible to the best of my ability. If there are any difficulties, you can contact me definitely. My email ID for those who are present now is Phadke1952, PHADKE, Phadke1952@gmail.com. So thank you, madam, and thank you, Sudhirji and the organizers for giving me opportunity to speak with all your members. So thank you very much.
On behalf of FAPSI, we thank you very much, sir. You have taken 2.5 hours and explain the latest amendments and circulars and tax rates issues and all these things in very exhaustive manner. Thank you. Thanks a lot. On behalf of the participants also, we are thankful to you, sir. Thank you.
Thank you.